At 8:42 on a Tuesday night in Charlotte, a 34-year-old physical therapist scrolls through home listings on his phone while sitting in a one-bedroom apartment he has rented for almost 6 years. He earns decent money, around $90,000 a year. He did what he was told growing up, went to school, built a career, paid bills on time, avoided major trouble. Yet every time he thinks he is finally getting close to buying a house, something moves further away again. Mortgage rates rise, home prices jump, insurance increases, property taxes climb. Suddenly, the same home that looked barely affordable 6 months ago now feels completely out of reach. And quietly, without saying it out loud, he starts wondering if home ownership is becoming something his generation may never fully catch up to. That is the real emotional reality many millennials are living with in America today. The conversation is no longer only about laziness, avocado toast, or bad budgeting like older internet stereotypes used to claim. Millennials are struggling to buy homes because the financial system they entered looks completely different from the one previous generations experienced. Housing prices exploded faster than wages. Student debt became normal adulthood. Rent absorbed years of potential savings. And inflation quietly raised the cost of almost every part of life at the same time. The result is an entire generation stuck in an exhausting financial middle ground, too financially responsible to collapse completely, but often not financially strong enough to enter home ownership either. What makes this psychologically difficult is that millennials grew up believing home ownership represented stability, adulthood, and progress. For decades, buying a house was treated almost like a social milestone, proving someone had made it. But in 2026, many millennials feel trapped watching that milestone move further away, despite working harder and earning more than they expected years ago. A married couple earning 6 figures in California can still feel financially locked out. A man in Atlanta with good credit and stable income can still panic after seeing estimated monthly payments. The issue is not always irresponsibility anymore. Increasingly, it is math colliding with modern economic reality. And before we break down the deeper financial and psychological reasons millennials still struggle to buy homes in America, and why the problem goes beyond simple budgeting advice, hit like, subscribe, and follow Andrew Finance, because this channel is built for people who want honest conversations about money, housing, and the hidden pressures shaping modern American life. The truth is, millennials are not just fighting expensive houses, they are fighting an entirely different financial environment than the generations before them ever faced.
One of the biggest reasons millennials still cannot buy homes is because modern rent quietly destroys the ability to build momentum. A 32-year-old airline technician in Orlando spends nearly half his monthly income on rent, utilities, parking fees, and basic housing-related costs before he even touches groceries, insurance, transportation, or savings. Every year, he tells himself he will finally start building a serious down payment. But every year, rent increases again, while home prices continue moving higher too. That is the trap millions of millennials are stuck inside. Renting is no longer just temporary housing for many Americans. It has become a financial treadmill that absorbs income fast enough to delay ownership indefinitely. Previous generations often used renting as a short stepping stone before buying property relatively early in adulthood. Millennials entered a completely different housing market. Student debt delayed saving. Wages struggled to keep up with inflation. Then rent prices exploded across major cities and even many smaller markets. As a result, huge amounts of income that could have become future home equity instead disappeared into rising monthly housing costs for years. And psychologically, this creates exhaustion. Many millennials are not refusing responsibility. They are simply tired of feeling like progress resets every time they get slightly ahead financially. A promotion helps temporarily, then insurance rises. Savings grow, then rent jumps another few $100s. Mortgage rates fall briefly, then home prices surge again. The moving target itself becomes emotionally draining. This is why many millennials now feel financially frozen between survival and ownership. They make too much money to feel poor, but often not enough to comfortably compete in the modern housing market. Another hidden issue is timing. Millennials entered adulthood during periods of economic instability that shaped financial behavior permanently. Student loans normalized debt early. The 2008 housing collapse damaged trust in home ownership for many families. Then inflation and rising living costs reshaped adulthood again during their 30s. This matters psychologically because financial confidence affects risk-taking. A generation raised during instability naturally becomes more cautious about massive long-term obligations like mortgages. At the same time, delaying ownership usually means facing even higher housing prices later. That creates a painful contradiction. Buy now and risk financial strain, or wait longer and potentially get locked out completely. For many millennials, neither option feels emotionally safe anymore. And that uncertainty is one of the biggest reasons home ownership now feels less like an exciting milestone and more like a constantly moving financial target that never fully stops drifting further away.
Another major reason millennials still struggle to buy homes is because modern American life became dramatically more expensive outside of housing, too. A 36-year-old medical sales worker in Colorado may earn over $100,000 a year and still feel financially stretched before even thinking about a mortgage. Health insurance premiums rise constantly, car payments are larger than previous generations expected, childcare costs can rival rent in some cities. Groceries, utilities, gas, and taxes quietly consume more income every year. This matters because homeownership does not exist separately from the rest of financial life. A mortgage is not just a house payment anymore. It sits on top of an entire economic system already demanding huge portions of monthly income before housing even enters the equation. That is why many millennials who technically qualify for mortgages still hesitate emotionally. They understand how financially fragile life already feels without adding another massive obligation. A couple in Seattle may calculate that they can technically afford a home, but once they factor in maintenance, insurance, repairs, property taxes, and emergency savings, the situation suddenly feels risky instead of exciting. This is where older generational advice often breaks down. Many millennials are not avoiding homes because they fear responsibility, they fear instability, and modern financial life gives them plenty of reasons to feel that way. Another hidden factor is lifestyle pressure. Millennials grew up during the rise of social media and comparison culture. Weddings became more expensive, expectations around travel, parenting, technology, and lifestyle presentation all increased. Many people are spending large amounts simply trying to maintain what now looks normal socially. Even financially responsible millennials often carry invisible pressure from student debt, financed lifestyles, or recurring subscription-based living costs that previous generations never dealt with at the same scale. This creates a dangerous financial squeeze. Income rises, but so do baseline expectations for everyday life. As a result, many millennials reach their 30s earning more money than their parents did at the same age, while still feeling significantly less financially secure. And emotionally, that creates frustration and shame. A man working 60 hours a week may privately feel like he failed because he still rents, despite earning solid income. But increasingly, the issue is not personal failure, it is structural pressure. Housing prices rose into a completely different financial reality, while modern adulthood became more expensive across nearly every category at the same time. The real reason millennials still cannot comfortably buy homes in America is because the definition of financial stability changed faster than most people emotionally realized. A 38-year-old high school administrator in Nevada eventually understands this after years of blaming himself for not buying property sooner. He spent most of his 20s paying student loans, most of his 30s dealing with rising rent and inflation, and now faces mortgage payments that feel dramatically larger than anything his parents dealt with at the same stage of life. But instead of seeing himself as irresponsible, he finally recognizes something important. The modern financial environment itself became heavier. Housing became more competitive, everyday life became more expensive, and economic uncertainty became more constant. That realization matters because millions of millennials quietly carry shame about not reaching traditional milestones on time. Marriage, homeownership, children, savings, stability. But timelines built for previous generations no longer match the economics many younger Americans are actually living through today. This does not mean homeownership is impossible. Many millennials will still eventually buy homes, but increasingly they are doing it later, with higher pressure, smaller financial margins, and more anxiety attached to the process. That emotional weight changes the entire experience. Buying a home used to symbolize security for many Americans. Now, for some millennials, it feels like risking long-term financial stress just to avoid being permanently priced out later, and that fear is powerful. The deeper lesson underneath all of this is that modern financial success may require different thinking than older generations expected. Flexibility matters more now. Lower fixed costs matter more. Strong savings matter more. Emotional stability matters more. Because in a world where housing costs, inflation, and debt pressures continue rising together, financial resilience often becomes more valuable than simply chasing appearances or traditional milestones as quickly as possible. The smartest millennials are not necessarily the ones buying the biggest homes fastest. Increasingly, they are the ones carefully protecting cash flow, avoiding lifestyle traps, and building long-term stability slowly, even if it looks less impressive socially at first. If this changed how you think about millennials and homeownership in America, like, subscribe, and follow Andrew Finance for more real-world financial psychology, honest money conversations, and practical insights about what modern economic life actually feels like behind the surface, instead of what older financial myths still pretend it should look like.